I love AMC, and I'm not being sarcastic. There is an AMC about 5 minutes from my apartment, and it's my favorite movie theater in all of Cincinnati. It's got nice power recliner seats. The video quality is good. The staff is friendly. The theater is clean. And taking the whole meme situation out of it, it is a stock that at one point I considered buying. And until the pandemic hit, and yes, we are going to talk about this in a second, but until the pandemic hit, the company had been doing pretty well as far as operating cash flow. But then the pandemic did hit, everything shut down, and AMC as well as other theaters haven't been right since. And not only that, but they had other contenders coming up as far as streaming services. We had Disney Plus and HBO Max starting to stream feature film cinema, which would normally be shown at theaters first, but now you can just stream it to your computer or mobile device or whatever. And that began eating away at AMC's business and is still doing so. And fast forward to today, and it's not looking good as far as its balance sheet. It's got $9 billion in assets, but $12 billion in liabilities, negative equity, and about $10.5 billion in debt. So it is not in a good situation. If something doesn't happen soon, it stands a chance of AMC, a company that I love, and I love going to the theater and all that stuff. I mean, it stands a chance of bankruptcy, just like Regal. Minus the whole meme stock part of it. If the company ever got close to a positive cash flow again and paying off its $10 billion in debt, like if it shows signs of not going bankrupt and getting back to positive cash flow, I would consider investing in it. Absolutely. But the meme stock thing did happen, and now you got hedge funds which are working really hard to short the stocks, and then you got bullish apes, which are retail investors, which are propping the stock up, which are almost certainly backed by institutions in some manner. I mean, retail investors aren't going to do that on their own, but you get the deal, right? The meme stock thing is a deal, and the price right now is so volatile. Like, you saw the 40% drop, and we're going to get into that right away, but the AMC stock is so volatile that tomorrow it could be down another 40%, or it could be up 80%, and you would not be surprised. Which brings us to today. AMC released a new APE unit as a meme-friendly way for the theater chain to raise cash fast. And yes, they called it an APE. They called it an APE, and there's a ticker symbol right now called APE. Now, it's not technically a stock, it's more like a unit. And look, I'm not going to read the article, and you can read this if you want to, but let's hit the high notes. So it starts here, and I'm going to read this out of order in a way that I think makes sense. It starts when the AMC thing exploded in 2021 and the stock price shot up. AMC sold a bunch of common shares in order to keep itself afloat. I don't have a problem with that. I mean, AMC it's in a situation that I feel for very strongly. It's in a rough situation. It's got to do what it's got to do. I respect that move. Eventually, it ran out of its allotment. It tried to get shareholders to approve selling more shares, which would dilute the market even more, which shareholders declined that. And so they went with this Plan B thing. And they created a unit, not a stock, but a unit, which is preferred equity according to AMC. And it was distributed to shareholders as a dividend. And now it's trading as a quote-unquote stock that you can buy on the market. Now, the initial units were distributed free of charge, but here's the thing. The company gets the right to sell more of the units in the future without shareholder approval. So, in my opinion, and you'll find out later in this article that APE holders will be able to trade in one APE unit for one AMC unit at a future date. So basically, it's diluting the shares without diluting the shares. So here it is right here. So basically, it's a way of diluting the shares without shareholder approval. And I gotta say, like, I respect what he's trying to do because, look, the company's gotta keep afloat somehow, right? Because it's in a very weird situation where, like I said, it might go bankrupt in the future. That is a possibility. That being said, in my personal opinion, and I'm not an expert at AMC. I could be wrong in this, but my personal opinion is I feel this is leaning too hard on the apes, and I think this is kind of a way of taking advantage of them. Now, I could be wrong, but this is just my opinion on the matter. And this right here is why I can't buy AMC. Like, as much as I would be interested in the stock, if it started making a comeback, not now, but if it did, it is so far into the volatility and a meme stock thing, and this situation is just really, really messy. And investors are reacting to this very negatively. Boy, are they reacting. Now, we don't know if it's the quote-unquote non-technical 2-for-1 stock split, or if it's this negative sentiment towards what AMC has done, or neither, or both. Who knows? But there's a correlation, and it certainly is not a good first day. What do you think about the whole APE thing? Let me know in the comments. But anyways, take care, have a great day, and eat your vegetables.